Today ended in the worst week on Wall Street since 2008. The Dow Jones had a smaller loss than yesterday, but the more than 12% drop for the week was one of the worst weeks on record. Economics professors are watching the markets very, very closely. 41 Action's reporter Nick Starling talked with an expert who says the markets will get worse before they get better.
If the market continues this downward trend, it will not only have an impact on your wallet, but if you plan on buying or renovating a house. A dismal week on Wall Street as the coronavirus shows no signs of slowing down.
The problem with the stock market is they're always looking for problems. They're looking for a problem 6 months or a year from now.
And the coronavirus is that problem, according to Park University professor Pete Soll, providing more volatility to the stock market.
I suspect that the expectations will cause a continued somewhat of a downturn. Whether it's a total crash, I don't know, but I think there will be a turnaround in not too distant future.
For those not invested in a stock market, the downturn could impact the housing market for the good and bad. According to Freddie Mac, because of the unrest in the markets, mortgage rates have dropped again to 3.45% for a 30-year fixed mortgage rate. The low rates and high consumer confidence drives the home sales upward. But in terms of interest rates, Soll doesn't believe those will change.
The Federal Reserve has been controlling the interest rates pretty tightly since 2008.
If you are in the market to buy a new house or remodeling, it could cost you more, as some of the building materials are halted if they're coming from overseas.
It certainly could slow construction, and it could slow output in virtually anything. To what extent can we make that up? I don't know. It depends on what it is.
While it's been a bad week on Wall Street, Professor Soll believes it'll only get worse before it gets better. Reporting in Kansas City, Nick Starling, 41 Action News.